going to be talking about the lumber industry and the housing industry and talking about the changes that we should be expecting over the next few months. Now, for those of you who don't know, I do work at a lumber yard. I do retail sales for a living. I'm up here in the Pacific Northwest. In timber country, lumber country, Oregon is one of the biggest producers of lumber in the country. And when it comes to the lumber industry, I pretty much have my fingers on the pulse of the industry. All right, let's talk about some of the things that are happening right now. For those of you who've been following my channel, you know that I get an email once a week, an email that tells me kind of what's going on in the different parts of the country and the different, building materials that are being produced, plywoods, lumber, different sources and stuff like that. Okay, so in this letter, some things that are the same, but a few changes as well. Now, we've been following OSB for some time, and this is what it has to say. OSB continued to basically trade sideways as most buyers are still trying to get with contract volume. Inventory levels remain lean throughout the system, including distribution in the secondary market. So OSB is in a limited supply, and I experienced this myself up here in the Pacific Northwest. What I found is that a lot of people will say, well, you should come to my area. There's all kinds of OSB. OSB, by the way, stands for Oriented Strand Board. It's used in the sheathing of a new construction. So if you got the skeleton of the building, all the 2x4s, 2x6, the sheathing is like the skin that goes on the outside. OSB is the cheaper version. So most of the time up here in the Pacific Northwest, we try to use plywood, but OSB is a popular product. However, we have limited access to it, and so we just simply haven't been stocking it for 4 or 5 years now, essentially since the pandemic limited the amount that was available. But this is what it does have to say. Fall maintenance curtailment should keep balance between supply and demand precariously balanced for the next 4 to 6 weeks, as Weyerhaeuser, LP, West Fraser, and Arbeck have downtime scheduled through October and November. Can be a very time across this various segments within the industry. So during a time in which that people would be loading up and getting ready for the new season, essentially they're going to have a limited supply available out there. Going into plywoods, the Doug fir plywood hasn't shown much change in recent months. Plywood has been hand-to-mouth absorption with no forecasted buying. Order files remain 1 to 2 weeks max. Pricing has remained flat on this commodity. The specialties have pushed out 4 to 6 weeks. Now, when they mean specialties, they're like things beyond the CDX grade. So like grades in school, A being the best and D being the worst. CDX is going to be a very lower grade plywood, and it's used more in the sheathing process since it's going to get covered up with siding anyway. So the higher grades, the ones with better face, so if you needed something that was a smooth face to be used, like you're going to paint it and it's going to be the finished product, those are the higher grades, and those ones are becoming less available, and you're going to start seeing the prices moving up on those ones, I would only assume, as the demand would pick up. All right, Southern Yellow Plywood. Southern Yellow Pine Plywood, there we go. Mill activity continued to slow. Mills that were quoting sheathing continued to ask for premiums, okay, on the thicker panels, because less of those are being produced, right? With thin panels eased back towards print. So even though there was a bit of demand on it from the lack of supply, it's those thicker plywoods that they're not producing as much of that are carrying the higher premiums. And this is again a sign of the weakening within the market itself. They're only producing that which is going to be selling, and half-inch CDX is by far the most popular product out there when it comes to a 4x8 sheet. So it makes sense that those thinner ones are the ones that they are producing the most of, where the thicker plywoods may not be so much in the as far as the availability within the inventory that's happening out there. Okay, lumber, talking about lumber. Sales of Western SPF were modest and price momentum stalled. We seem to be in a balanced supply-demand cycle, and mill order files are at a reasonable 2 weeks. Now, it goes on to say production cutbacks. This is important to know, because we have just recently had West Fraser shut down a mill in Florida, and I believe I left a link down in the description for that. So yet another mill has closed down operations. And it says this, production, and this is talking about the western side, that, that's talking the eastern side over there, but what I'm referring to is the western production here. Cutbacks and rising duties will catch up to the U.S. in the fourth quarter. This is, again, reason why I'm saying if you need to get your lumber, you need to get it now, because the bottom of the lumber prices is here and now. We're not going to experience cheaper prices going into the future. We're going to have limited production. And then again, with the cutbacks and rising duties, we'll catch up in the fourth quarter and will have an impact on price and availability. A spark in demand could throw our balance off with large price swings. Very important to understand that it's going to be a demand coming from the builders out there that is going to start zapping the inventory, and it's going to start causing the prices to move up. All right, Eastern SPF. 2x4 gave back $5 in the East, while 2x6 gained $5. So again, 2x4 being the most popular lumber, they're going to produce more of that than the 2x6, leaving the 2x6 limited in availability, and the prices would move. Mills are listening and take some small counters on prompt loading cars. Pre-cut studs of 2x4 and 104s are showing some of the deepest discounts right now. And again, you have to think, what is it the mill is producing? That which is going to sell. 2x4 pre-cut studs, 92 and 5/8 and 104s, by far probably one of the most popular lumber sizes out there. So yeah, it would make a lot of sense that that's what they would produce. Wildfire updates. The weather has moderated in BC and Alberta this week. The fire weather indices remain moderate to high in most provinces. Currently, there are still 384 fires burning, with 132 of those out of control in the BC area. There are 127 fires burning, with 14 out of control in Alberta. So there is still plenty of fire season taking place up there, even though that should be coming to an end with the rainy season starting to approach. But it's an issue up there. Southern pine, all zones. Southern yellow pine traded consistently this past week. Mixed tallies were in high demand, which limited some mill offers as they were taking this time to do maintenance and start more curtailments. See, again, there's even more curtailments and shutdowns and depletion of inventory taking place. Right? Narrows in all zones went up 5 to 10 per thousand as 18s and 20s became increasingly more scarce. Right? The longer lengths, not as popular, the mills aren't going to produce as many. Wides of 2x10 and 2x12 are still at least available. So we saw 2x10 fall in all zones. 2x12 remained in mostly flat, except for number ones in the East, which fell 20 per thousand, with essentially no movement in the last few weeks. Going into Western species of dry dimension, let me see here. Overall numbers appear to be leveling off. However, wides of 2x6 continue to be the most sought after items. Again, very popular. 2x6s, 2x4, 2x6, by far when it comes to framing a house, are going to be the most popular sizes. 2x6 and wides continue to be the hottest item in regards to dimension items across all species. Studs in generally are relatively flat. 2x4 trims appear to continue to be more readily available compared to the 2x6 counterparts. Heavily mixed tallies, high grades, select structural, and straight 16-foot loads continue to be a hit or miss out there and on the open market. We are seeing some offers below print 2x4 this week, and if in the view this is a window of opportunity for covering needs. And again, I don't think that's going to last very long. Again, they're producing the most of what is available, or the most of what is going to be selling out there, and that's going to be 2x4. Let's see here, one last one, and then we'll talk about housing a little bit. Okay, the green dimensions. Narrows in green fir this week sold at a decent pace, with mills pushing 2x6 up a few bucks where they could. The real stars of the week were wides. 2x8, 2x10 saw a very good demand, and 2x12 was a fight to even find it. So again, like 2x12, 2x10, they're not available, so the demand for those is quite a bit dramatically higher. On 2x12, if you could find it, it was moving up in price daily. Right? So again, you have to be, if you're looking for lumber, this is the time to get it, because the prices are moving up, just like they said, on a daily basis now. Dimensions is strong and will probably stay strong for the next 30 days or so. Studs sold well for mills, but sales are barely keeping up with production. Think about that, right? The sales are barely keeping up with production. A few mills tried to push selected items up with little success. One of the mills tries to push the number up, and you can buy at a lower price from the other mills. Studs should be relatively flat this week and trade in a fairly narrow range going forward. Timbers and cuttings remain strong, with one of the Washington timber mills shutting down permanently. And now this is again something that I have experienced, and I reported on it last week. I tried to go out there and find some 6x10 12-foot standard and better, and the 3 vendors that I would typically use had none available in that particular length. They had 8-footers, they had 20-footers, but everything in between had been depleted and was not available for purchase. So again, this is a sign of it taking place. So although it doesn't seem dramatic, it is very telling of what it is that's going to be coming to the future. Now, a lot of people are expecting a ramping up of building. Like the home builders are going to increase their production of homes. And a lot of this is coming from the promises of the next administration. You know, Trump saying that he's going to free up government land and take away a lot of the restrictions that are holding back builders. And, you know, Harris is saying something about offering up, you know, for first-time home buyers, you know, $25,000 and incentivizing builders to go out there and build new homes. All sounds great, but coming down to the bottom line of it is builders have to be in a profitable position in order for this to be a real functioning, operating housing market. Now, builders want to build. Like, they don't not want to build, right? I mean, that's not what builders do. Builders want to build. That's their bread and butter. That's the way they make money, is when they're putting houses together. Not when they're sitting back going, oh man, I don't know, cautious market, feeling weird about it. That doesn't bring new inventory. That doesn't bring a builder's business into a profitable position when they're feeling that way. So as the interest rates come down, or at least the promise of interest rates coming down, and although we did see a 50 basis point cut just recently within the Fed funds rate, we're watching the mortgage rates drop dramatically. They've gone from 8% down to around a little over 6%, I believe. So a good 2% drop in mortgage rates over, you know, what is it, probably the last year, maybe or so. And you are going to find that the more that people are of the impression that the interest rates are going to go down, the more likely they are going to be willing to buy that house or take out that mortgage with the expectations that they could get a better financing, like a refinancing, going into the future as the rates come down. So now with this idea coming to the market, you are going to find that building permits are going to start increasing. You know, housing starts are going to increase, mortgage applications are going to increase, you're going to start seeing the sales increase. And as that starts to take place, it's going to start bringing more confidence to the builders. The thing we have to understand is that the builder confidence is still negative. It's not positive. It's positive in some aspects of it, but home buyer traffic is still negative. The sales conditions is still negative, but it's getting closer to the confidence level. As those builders become more confident, the more that they are going to demand the lumber in order to put these houses together. When that expectation starts to hit the markets and the increase in demand for the lumber starts to take place, you're going to find that there is a very limited supply of lumber on the market out there, and their prices are going to move up. There is very little doubt in my mind. 500 per thousand is not a position in which that many of these mills are going to be profiting. And now you can see that happening throughout the last year as the lumber future prices have remained at a very suppressed price of 500 per thousand, 550, you know, high 400s. Again, we have seen massive amounts of mill curtailments, mill shutdowns, like permanent shutdowns taking place, not only up in the British Columbia area, over here in the Pacific Northwest on the West Coast side, but then right across the country, all the way into Florida, which a West Fraser, I believe, has just announced that they are shutting down their mill, and that's 130 jobs right there. So we can see that the damage that has taken place within the inventory levels of lumber is very prominent right now, and the prices are low. This is not a good sign for those who are going to be doing lumber purchases going into the future. We are going to see higher prices going in so long as the builder demand is continuously moving into that higher confidence. And I cannot see where it would reverse and go the other way, unless something like major, like I know a lot of people are predicting like major recession or something of that nature, maybe massive job losses, high unemployment. If those conditions start to impact or start to come to the economy, start to come to the broader economy, then yeah, you could see that, prices may end up stalling out again from moving up, just from the fact that the builders would be like, hey, I don't want to build in this condition. However, I don't see that happening. I see the builder's confidence is getting closer and closer to being over that 50 on the index, which is going to start bringing them to the table to start putting new projects together. And when that demand increases, there's not a lot of lumber out there, and you're going to see the prices move up. Again, this is inelastic demand that takes place. We have to understand that. The inelastic demand from the contractor who has now signed a deal saying, I am going to build this house. Once he starts forward on that, once the foundation is down, once they start going into the lumber purchases, if it's not available, they will pay any price to get it. Any price. It's inelastic demand. They can't postpone that. They must move forward. And so when that starts to happen in a profound way and there's a limited amount of inventory, right? Supply demand forces start to impact the economy, and bang, you're going to start seeing prices moving up in a dramatic fashion. Thank you all for being here. We got 176 people watching right now with 56 likes. Go hit that like button and we'll get more people to join in on this. All right. Yes, I love salespeople. Yeah, well, I'm one of them, man. I would know. All right, let's go check out these super chats. Lumberjack Landlord, thank you for being here, brother. I appreciate you. All right, let's see here. $1.99. F the Republicans. Kamala will stop fires. All right, well, you internalize that expectation out there and work it for you, but I don't have any confidence in any administration to do anything that's going to be any kind of benefits and anything within the economy. I must make the decisions for myself and what I see happening out there in order to benefit myself. But when it comes to the administration, I don't have any faith in them whatsoever. None, zero. And that's me personally. But thank you for the $1.99. I really appreciate the support and your comment. F the Republicans. Kamala will stop fires. I'll read it again for you. All right, Matthew, Lumberjack Landlord, thank you so much for the $10. Conservatives know how to run economies. Kamala doesn't. That last 4 years are proof. Yeah. I mean, for somebody who's in the game as much as Matthew is, I think his opinion is pretty valid as far as that goes. But again, I don't put my expectations out there on the administration to do anything that's going to be any kind of benefit to me or anybody else. So I look at what it is that's going out there and how it is that I'm going to best position myself to try and deal with that. But any hope and belief and change that there's, or a belief of change is going to come to the economy in any kind of profound way, that I don't see it. Like, I mean, personally, I don't. It could happen. But thank you, Matthew. I really appreciate the $10 and all the support you have ever given the channel, man. You're always there. And I look forward to. I bet you're gonna. I'm guessing you're probably gonna be at Zuber's meeting or down in Vegas in February. So I'm looking forward to that as well. All right. The only way the housing market will pick up is if Kamala gets in. I doubt it. Okay. I mean, I think about what it is that's being promised. All right. Here you are, you're going to offer 25 grand to first-time home buyers, which puts pressure in demand, increases the demand. Well, we already have a high demand, right? That's going to increase demand even more. So if you have a supply-demand issue and you increase demand and there's not a lot of availability out there, what's going to happen to prices? They're going to go up. Now, the idea is to offset this with even more taxing of the people in order to incentivize the builders out there. But what is it that the builders are complaining? Like, the builders would already be there. They don't need to be incentivized. They're incentivized by having a profitable position to be in. That's what's all the incentive they need, is just to be profitable. And now, in order for there to be homes for everybody, right, which is never going to happen, but the idea behind it is you build starter homes, right? Homes that are inexpensive for the young couple or the young entrepreneur or somebody who's getting in there to try and acquire one of these homes. It's very difficult when you have very expensive homes out there. Now, the builder is sitting in a situation going, well, I would love to be profitable. That's my only concern, is to make sure that whatever it is that I do is going to be profitable to me at the end of the game, at the end of the day. Right? And now when I talk to the builders that I know personally, and now I do live in an expensive area. In fact, I live in the top 10 most expensive cities in the entire country with populations 10 to 50,000. Astoria is in the top 10. So yes, I live in a very expensive area. And when I talk to the builders around here, I say, hey, how come you don't build starter homes? They say there's no profit margin in it. Like, they would build it if there was profit inside of them, but the only way that they can profit is to build the biggest, most expensive home they can in our particular area in order for them to be profitable. There is no option for them to build a cheap starter home. All right, so now if you do incentivize the builders, it's like, okay, hey, you can't build a very profitable home when you're building starter homes. Let's incentivize you with a bunch of money, right? So we'll tax a bunch of people, right? You know, tax them and hand it over to the builders to incentivize them to build cheaper homes. Well, now, what's the problem that the builders are facing? They're like, well, you got all the input costs going into the house, and a major part of that is the fact that they can't find labor. They can't find the labor to do it. They can't find cheap labor, right? I mean, what is it going to take? It's going to take cheap labor to put this house together. You're not going to get any cheaper building materials. I mean, there might be, right now, you got the cheapest lumber you could possibly get, but if you start adding a bunch of demand to the industry, you're going to see lumber prices moving up. So I don't see where building materials are going to come down in any kind of profound way that's going to provide the builders with the ability to build starter homes. Right? The material cost alone is going to stay elevated, which means that they need to figure out a way to build a house that is going to be profitable. Generally, it's going to be the expensive homes. Starter homes with expensive material in it doesn't necessarily give the ability to provide a starter home price. Does that kind of make sense? So here you want to build a starter home, but the material cost going into it is just too expensive. And then on top of it, you're going to start in with a whole bunch of incentive to get builders to start to build, but yet they are already sitting in a labor shortage position. So now you have to pay even more to the labor, which is going to increase the cost of the house. Right? So not only do you have material prices going up, now you got labor prices going up because of the added demand going to the builders, being incentivized by the taxes, by tax money or whatever. So again, that doesn't provide the builder with a more efficient position to build those starter homes, right? If the labor cost goes up and the material cost goes up, again, their profit starts to diminish. So that means they need to build a bigger home that's going to sell for more so that they can get the profit back out of that house again. This is the situation that nobody seems to really wants to discuss. They just think that magically throwing a bunch of money at the builders to incentivize them to go out there and build is this all of a sudden just going to bring a bunch of labor to the market that says, oh yeah, hey man, we'll continue to, we'll just all of a sudden show up in droves at the same price, all of us together at the same time. Does that no, that doesn't work like that. The more that you increase the demand for the labor, the more scarce that labor is going to be, and the higher the price you are going to have to pay in order to attract those people. That's what's going to end up going down. So no matter how I look at this, no matter how you incentivize it, no matter what you do, you are going to find that the ability to provide more homes at a cheaper price to the economy is not going to be there. Even if you did it for a short amount of time, it's only going to benefit the handful of people who have access to that $25,000 or the first builders who are incentivized. After that, everybody else is going to have to suffer the consequences of the new money coming in. Because anytime you bring new money into the system, you will have a separation between the rich and the poor. And there's no better way of distinguishing the rich from the poor than the capitalists who are out there who have invested into the system and the property owners themselves. Everybody else is suffering, having to be reliant on the property owners or the capitalist or the government or somebody else out there. But that's the unfortunate situation that arises every time you have new money pouring into the system, which is being promised. Right? Separation between the rich and the poor. All right, thank you all for being here. Thank you so much. Cousins. Jesus, I can't say your name. Kuznetsky, sorry, bro. 4.99. We are our own. I think we are on our own is really what it should say. Thank you so much for the super chat. I really appreciate you, man. All the support you guys always do for the channel is just amazing. I can't thank you enough. All right, Lumberjack Landlord back with the $20. Simon is correct. I will make money either way. The people, my renters, small business struggle most in the last 4 years. The previous, and he would know, right? I mean, you think about it. He has how many 150 properties that he rents out. You would think that he would understand when it is that people are in a better position in paying rent and buying, the things that they enjoy in life. He would be the first one to know, because if the rent's not coming in, that means people are being damaged out there and they're hurting and failing to acquire the money that they need in order to pay the rent. He would be very sensitive to that position, and as far as experiencing and seeing it. All right, here's previous 4 years, far fewer struggling. I see 20 apps a week with fees and permits. You can't build cheap. Yeah, and that's just exactly it. And see, that's again, having been in the game like Matthew has for as long as he has. Like, you think about it, he went through the entire Trump administration and then the entire Biden administration to see what it was that, the rent's being paid. The rent is getting paid. That's a decent economy. If the rent's not getting paid, then it's probably not a decent economy. The rent is going to tell all. I mean, I think about it. Just recently, we have a huge shortage of rental properties here in Astoria. Again, the most expensive, top 10 most expensive cities to live in. And they have just finished an apartment complex. In fact, I did a video on it a few months ago showing how it was basically abandoned. Well, right after I did that video, somebody, I think it was already in the works, an investor came in, started the project up again, and is now coming to completion. And these apartments are ridiculously, super expensive. Single bedroom, $1,500. The 3-bedroom, Riverview, beautiful pimpin' apartment, it's like $2,300 to $2,600 a month. That is more than what I pay for my mortgage on a 4-bedroom house that I purchased, that I signed the deal on going on 3 years ago. It was, just about 3 years ago. I could not afford to buy my own house. In fact, I don't even know if I could afford to rent in my area the same size place that I am buying right now. I certainly would have to downsize the amount of square footage I have in order to acquire one of these properties or apartments, and I would be paying the same as I am in mortgage right now. I cannot see how this is going to reverse in a profound way that is going to return to anything that would resemble normal or good or fair or right or anything else like that. To me, when I look out there, I don't think about what is fair. I don't think about what is what it is that can be done to make it equal for everybody. That's not the way this works. There is a separation between the rich and the poor that has taken place. And if you are in anticipation or expectation that there's some administration that's going to come in and change the way that new money separates the rich from the poor, is incorrect, man. All the years of throughout the studying of all the economic theories and everything that I have found, that is one thing to be very consistent. New money and the move into luxury separates the rich from the poor. And I cannot see how it is that any administration promising to throw $25,000 at new home buyers, or to incentivize the builders, or to take tax money and do anything with it and expect that there would not be a driving of the wedge. That is ridiculous to think. If you could find an example of it throughout history and it has any kind of lasting effect that doesn't do that, I would like to see it, because it doesn't exist. New money separates the rich from the poor, and there's no way that the government is going to do the right thing, because it is incredibly too painful for everybody to experience. Because what they would have to do is say, sorry, we're not incentivizing the builders. We're going to let the free market figure it out, right? We're going to have to step out of the way by not taxing and not incentivizing, right? Does this sound good? Does this sound fun? Of course not. People who have no way of accessing property are going to lose their mind if the government doesn't step in to help them. And so by making the government, literally making them, by voting the right person in, by making government do something about it, they are literally forcing the wedge between themselves and the rich. It's sad to think, but that's the case. Understand it for what it is. Know that it's taken place and position yourself in a way that you can then benefit from that. It's not going to be easy. It is not going to be done through the traditional methods. You're not going to have a regular 9-to-5 job that can go out there and acquire the savings for a down payment on a house, because even if you had a significant down payment, your monthly income doesn't provide enough to make the payments on these expensive homes. It's just not available. Even a good job sucks now. So you're going to have to figure out how to house hack into it. You're going to have to figure out how to team up with other people. You're going to have to figure out some other way of getting into a piece of property, because if you do not get to that property, if you do not find a way to do it, you are going to get separated from the rich. There's very little doubt in my mind about this. And you don't necessarily have to do it with property. You can do it by being the capitalist. You can invest in stocks and bonds and business out there. You start businesses, doing things that then has money flowing towards you in whatever way that you can. But if you are not actively pursuing that sort of outcome in your life and having more of an expectation of the correct administration to provide you with a better way of life, you are going to get separated. You are going to find yourself on the bottom side of the wedge. Very little doubt in my mind about that. All right, half an hour into this, man, I just don't know how to shut up sometimes, right? All right, you guys are awesome. Let's see here. Focus on relationship with Jesus Christ. He will always provide. All right, banks will just jack up the refi cost and make money. In 2006, the propaganda was there's no supply because almost nothing was for sale. Yeah. I mean, back then they were, look at all, like, you want to see something good, just look at home starts and permit issuance and stuff like that taking place prior to what we are experiencing now. Like, it was a dramatic rise and fall of what was taking place within the home building industry. There was a huge overbuild followed by a complete devastation underbuild. And it took a while to, like, in fact, I think there's an article down in the description that talks about this exact thing. And it took a while to get through that oversupply, undersupply situation in order to find equilibrium. And even now, we're still suffering the consequences of it. Home building is not something that just repairs itself in a couple of years. This is going on decades, and it might still take decades to even find what would be considered an equilibrium. I don't even know if that can even be found, especially considering, how much takes place during these decade-long breaks between recessions and expansions. It's like, I don't even know how to quite describe it anymore. The return to a normal housing market is to understand that there is no return to the way it was. There is no normal, right? Normal doesn't exist anymore because we don't have normal economy like we did before. We have expansionary economy, one that is coming to a point in which that interest rate adjustments no longer stimulates the economy, and that money printing, quantitative easing, asset purchases, and job owning is really what drives the stimulus into the economy during recessions. But the actual lowering of interest rates doesn't have any position to stimulate the economy because they cannot get far enough below the neutral rate. This is something that we're going to discuss more in the future. What time is it? Alrighty, guys, I got like 5-10 minutes left here. Would open borders make housing market stable or less? I would not think it would make it stable, because more people that you let into the country, there's more people who need jobs or need places to live, right? So I guess the idea is that if you bring in, if you open up immigration and allow more people to come in, then you would have more labor to go to the housing market to build houses. The only problem is that then you need a place to house all those people, and that's already the situation that we are facing, is that there's a limited amount of housing. So you bring in a bunch of people that need to find a place to live. What do? You increase the demand for homes. Right? Again, increasing the demand causes the prices to go up. Eventually, I guess it would be offset if all that new labor that came in went directly into building homes, but I don't see that being the case, right? I mean, I guess it could be on some level, but it's not going to be in an extreme level that could then fix the housing market. I can only see it being a problem. There is no fixing this, right? I mean, we have to understand this. There's no fixing the situation. It's better to understand what is happening, and so therefore you can be strategic on what it is that you need to do to deal with these problems. Like that's how it works. That's why I'm saying you got to follow Matthew Lumberjack Landlord, and learn what it is that's taken place from his view. He is in the game. He's going to tell you which avenues that you can go through in order to acquire the house that you need to do. Like, again, house hacking, teaming up with other people, figuring that out. But you're going to have to step out of the traditional methods of saying, hey, I got this awesome 9-to-5 job. I've saved up a bunch of money. Now I'd like to buy a house. That might work in some areas, but that won't work in my area. Like, a regular 9-to-5 job isn't enough to cut it. Like, even with what I have going on now, full-time job, my wife's job, working YouTube, I would not be able to live in my own town. Like, this doesn't work. The remote workers, the hospital district, the elevated property owners, the how should I say it, the more fluent property owners here have just priced us all out. Like, the average worker here is suffering the consequences of that, and most of them are just doing that. Like, they're gonna have to team up and rent apartments together because there's no way that they can afford an apartment on their own. All right, Matthew, again, man, thank you for loading me up, bro. All right, we average building 21 million homes each decade for the last 90 years. Wow. All right, 2010 through 2020, we only built 5.6 million. The shortage will remain for some time. Wow. I knew it was down, but dang, I never heard that statistic before. So 21 million every decade for the last 90 years. And you think about it, during that time, we had a hell of a lot less population. There was less people here. And so now we have, a quarter of the homes being built and a hell of a lot more demand for them. Like, how could that possibly lower prices? During a time in which that you saw interest rates go up. So if the idea that if low interest rates causes housing prices to go up, high interest rates should have brought housing prices down. I thought that when I bought my house. It was one of the things that were freaking me out at the time, was that, man, I am going to go underwater when the interest rates move up. I thought that for sure. Right? I put a lot of money down on my house, and I was mentally prepared for that. What I was not expecting is that interest rates would go up and then the house prices continue to go up dramatically. Now, again, we have to think about it. Very limited amount of inventory out there. And when you see a third of all homes going to all cash buyers, they could care less where interest rates are. They're willing to pay at this price. A third of homes being sold. Right? What does that tell you? The property owners are separating themselves. The rich elitists are separating themselves. The capitalists are separating themselves from everybody who is not doing that. Look at the stock market. Look at the housing market. Look at everything that is out there in the investment world as opposed to the worker. Like, everybody says, oh yeah, F the worker. No, man, it's not that. What it is we are now moved into an economy that has no production and savings to it but only consumption, debt issuance, and luxurious life. That's the major issues. You're not going to reverse that. It's best to understand it for what it is so you can position yourself for it. Alrighty, guys, I would love to sit here and hang out and keep talking, but I got to go back to work because, yeah, that's what I do. I got, I got to pay the bills just like everybody else. Not with everyone leaving high state tax states that drove the prices up for locals. I mean, okay. So my buddy bought a house in Missouri for like $30,000. It was 35 or something, $35,000. He was like, dude, it's not a great house, but man, you could live in it. You could totally live in it and work on it. And I was like, man, that is awesome. I can't believe you found a house for like that kind of price. A couple years later, he moved away. I said, what happened, man? I thought you had cheap real estate. He's like, there's no money there. You can't chase money there. There's no money to chase. That's the problem. There might be cheap real estate some places, but in order to buy that cheap real estate, you're going to have some sort of income of money that's coming from outside that particular area. And that's new money coming in. And the more people do that, the more they're going to start separating themselves from everybody else. And those are going to be the rich property owners of that particular area too. Right? It's only a matter of time. Alrighty, guys, I got one more super chat and then I got to bail. Billy, thank you so much for the two euros. What is that? 2 lira? I can't see the little emblem. I'm sorry. Where do you see Western red cedar prices moving? I see Western red cedar prices moving up, and they're going to move up in a dramatic fashion as well. They're already moving up. And the main reason you're going to start seeing those prices moving up is because of what a lot of people don't know. I mean, here in the continental United States, we have a huge lumber industry. Western red cedar is a major component of that. However, the majority of the Western red cedar comes from Canada, like almost all of it. And so when you have issues that the Canadian mills are facing right now, you got the wildfires, you got the tariffs, right? 14% tariff on softwood products coming from Canada. That is not going to be able to put a position into our lumber industry of more availability. That's going to be less availability, and that's going to mean higher prices. So Western red cedar is definitely going to move up along with all the framing lumber out there as well. Right? Some of the other species you might find, a little less impacted, but still, I just don't see any part of this industry that's going to find cheaper prices going into the future. I believe the cheaper prices are here and now. Alrighty, guys. Matthew, thank you so much again, man, for the $20. You're awesome. The rich separate because they own assets, period. That's it. They are the ones who held back on pleasurable experiences so that they could chase the excellence by putting their money into stocks and bonds and real estate and doing this, like sacrificing their pleasure so that they could be in a better position by buying assets. And you're absolutely right. We own cash producing assets. 30-year fixed rate debt is better than renting every day, all day. My mortgage, the same for 30 years. Rent will be 6 times in a 30-year period. You're absolutely right, Matthew. And that's that's by going into the position of understanding that you are going to be buying this house as that asset to, not only to provide yourself with a place to live, but then also secure yourself from being impacted by higher rent prices going into the future. You can use that position in order to acquire more stocks, more property, all kinds of stuff. But you have to generally wait a little bit of time so that your mortgage rates actually become very cheap comparatively to the rent that you're paying out there. But I have two schools of thought on that too, because there was a time in which that I wanted to be a renter. When you are a renter, you have a 30-day liability. That's it, not 30 years liability. You have 30 days of liability, and at the end of 30 days, hey, if you can't make the payment, you can back out. They don't foreclose and lose all your assets and lose everything that's going on like I did with the foreclosure, right? That happened in my past. It took me 10 years to get out to recover from it. When you have 30-day liability by renting, that's it. You just at the end of 30 days, it's over, right? You're done. But if you take that position, you better do something to acquire assets during that time. because you're going to want to be 100% in assets and zero liabilities. That's how rich people make it. Now, renting can be a good thing if you take that position that I need to be nimble. I need to be able to bail out of this area, go over there to make money. I need to be able to travel. I need to be able to say, no, I don't need this place right now. I'm out of here in 30 days. That is a very different type of mindset and activity that you are behaving in. If you want to be settled down, you want the 9-to-5 job, you want to be able to buy the house and stuff like that, renting is a terrible idea, right? Buying is absolutely the position that you want to be in. But again, you know, that's how you need to position yourself for what economy that you are living in. Wow, man, you're just hitting me up today, man. We got Rafter Jacks with the $5. Hey, I've got a mortgage at 7%. Should I refi now or wait for November rate adjustments? Also, if the economy crashes, will banks call in mortgages? Well, I think it's a possibility that they will, but I don't think that's like very high. I mean, my concern over that, it would be very, very low. I mean, is it a possibility out there? Yeah, I mean, I guess it could. But again, like, my concern over that is really low at this point. And should you refi now or going into the future, I see more, as long as the Federal Reserve keeps the forward guidance signaling jawboning in a rate cutting position, then I would think that you would be able to find cheaper mortgages going into the future. Just think about what it was that has happened over the last year. Just the idea of the Federal Reserve cutting 7 times this year lowered mortgage rates, even though they hadn't done anything. A little bit of balance sheet adjustments, but really it was the perception coming from the markets that had lowered those mortgage rates. And if that perception continues to be prevalent within the economy, I think you're going to find that there's going to be cheaper mortgages going into the future as well. All right, Billy, thank you again for the 20, man. I really appreciate you guys are just loading me up here right now. Angry capitalist, rent from oneself by owner occupying a multifamily. Totally agree. Totally agree. Get into duplexes, fourplexes, maybe rent a house or buy a house with an apartment in the basement and live in the basement, that kind of thing. That's the type of mindset that you need to go into in order to acquire some property, especially if you have just a regular job, you know. But then that's the possibilities that you can take. All right, I got to see if I got all these super chats because I got to go back to work, guys. All right, we got that one. We got Billy. We got Rafter Jacks. We got Lumberjack Landlord and Billy again. Okay, I did get through all of them. Man, thank you everybody for all the support for the channel. We just got $100 in super chats from this video. This is incredible. Thank you so much. And, you know, again, following the lumber industry, man. Follow the lumber industry. It is so telling about what it is that's coming. Like, there is very little doubt in my mind that we are on the bottom right now when it comes to lumber prices. Mills do not make a lot of money. They're very unprofitable down at 500 per thousand. They will tighten up that inventory and the prices will move up when you see the home builder demand increase. And we're starting to see that now, right? The administrations are promising it. Even whether they do anything or not, just the promise of it coming to the markets is going to start pushing people's behaviors, and you can see that taking place now. All right, guys, I would love to stay out here and keep talking, but I got to go. Uneducated Economist, you let me know.